Hey everyone, welcome back to the channel. If you're looking to build long-term wealth through the stock market and actually understand why stocks continue to be one of the most powerful vehicles for growing your money, then today's review is for you. We're diving into one of the most respected investment books of all time, Stocks for the Long Run by Jeremy Siegel. This book is often called the Bible of long-term investing. And by the end of this video, you'll know exactly what the book teaches, who it's for, and whether it can actually help your financial strategy. So let's get into it. Jeremy Siegel is a professor of finance at Wharton and a widely respected economist. His book, first published in 1994 and updated over multiple editions, compiles more than 200 years of market research. The core question he answers is simple. Are stocks really the best long-term investment? According to Siegel, backed by mountains of data, the answer is absolutely yes. The central message is this: over long periods, stocks dramatically outperform bonds, gold, cash, and nearly every other major asset class. But Siegel doesn't just say it. He proves it with historical evidence dating back to the early 1800s. His charts and research show that despite crashes, wars, recessions, and inflation, the long-term trajectory of stocks continues upward. Let's break down the most powerful lessons from the book. One of Siegel's strongest arguments is that inflation is your true enemy, not market volatility. Cash loses purchasing power. Bonds barely stay ahead of inflation. Stocks, on the other hand, consistently grow your wealth faster than prices rise. Over 200 plus years, stocks have delivered about 6-7% real inflation-adjusted returns. This makes them one of the most reliable inflation-fighting tools in history. Siegel emphasizes that volatility decreases the longer you stay invested. Short-term returns can swing wildly, even negative over days or months. But when you zoom out to 10, 20, 30 years, stock returns become surprisingly stable. This supports the idea that the average investor shouldn't try to outsmart the market. Instead, stay invested, ride out downturns, and let time do its thing. Siegel covers major events like the Great Depression, high inflation in the 70s, the dot-com bubble, 2008 recession. These events were devastating in the short term, but the long-term trend always recovered and moved higher. Siegel even argues that many crashes, though painful, offer some of the best buying opportunities for disciplined long-term investors. A huge portion of historical stock market returns comes from dividends, not just price appreciation. Siegel shows that dividend-paying companies are more stable. They outperform non-dividend stocks over long periods. Reinvesting dividends greatly boosts total returns. Investors who ignore dividends are missing one of outperform actively managed funds. Why? Low fees, long-term consistency, broad diversification, no reliance on a manager's predictions. In Siegel's view, most investors will get better results by simply buying and holding a low-cost index fund like the S&P 500. Siegel compares the long-term risk of stocks and bonds. Surprisingly, bonds may appear safer short-term, but over long periods, they often fail to keep up with inflation. Stocks are more volatile day-to-day, but they offer greater long-term wealth protection. Stocks for the long run is perfect for beginner investors, long-term index fund investors, anyone wanting to understand market history, people planning for retirement, value investors who want data-driven guidance. If you want a book full of charts, history, and deep analysis, this is a must-read. Jeremy Siegel's message is timeless. Don't fear the market, understand it, respect it, stay invested. This book is an essential guide that explains why the stock market grows, how to build wealth through it, and what mindset successful long-term investors need. It's not just motivational, it's backed by centuries of